happy Tuesday, everyone. I hope you are doing somewhat well. Maybe give me a quick hand sign that you can actually hear me. Maybe give me I don't know, a thumbs up or like some waving or a heart or something. Great. Thanks, Fabio. Good. So I know you can hear me. Um, Welcome to this Cake DeFi Twitter space. We're doing those every Tuesday, 12:30 Europe time. It's here 6:30 p.m. in the evening, 6:30 a.m. in the US. And I am quite impressed how many messages I get afterwards from people actually in the US who get up very early in the morning and telling me you're listening to this, yeah, when you make your coffee or when you get ready for work. It's quite nice to hear that. And obviously, welcome to all of you who are listening to the recording, either on YouTube or as a podcast. Last week we discussed obviously a bit about the drama that was going on in the entire kind of very leveraged institutional space. Back then we had everything around Celsius. Then Three Arrows came in over the weekend. Babel Finance came in as well. This entire thing seemed to have calmed down, but it cost the Bitcoin weekly 200 weekly average to close below for the Bitcoin weekly price to close below the 200 weekly average, which was at around 22,400 or something. At the end, the Bitcoin price on the weekly closed just above 20,000. And now we are trending upwards. We are at 21,000, kind of glimpsing into the 22,000 range again. Alts have recovered as well. Everything seems to be going well. General markets, futures are in the greens as well. So all of it kind of is hinting a bit at a bottom. Or is it? Is this just a fake out rally, well, massive dump, then you have these little fake pumps, and then you dump more? Or was this actually the bottom? We're going to analyze a bit, discuss a bit, maybe talk a bit about if these are great times now to get to start buying. And yeah, we're going to look a bit into the cryptoverse. What do other people say? With that, I'm going to get our co-host Fabio in. Fabio, how are you doing? How's the community going? How was the weekend? Yeah, what's the development?
Hey everybody. Um, yeah, maybe let me start off. Firstly, yes, last week I shared a little bit of my own emotions and what it does to you to see your investment decrease with 70%. I got a lot of DMs afterwards where people were a little bit worried about me. No worries. I haven't sold a single Satoshi, diamond hands. But of course, I have these emotions, as most of us do. Like a lot of people reached out to me and said they feel the same way. They consistently think of, oh my God, I should have sold a bit, and now I'm down and it's too late to sell. All of these things, and maybe as a bridge, I kind of there is this. Let me start with an analogy. um, Probably a lot of you can relate to this. So my girlfriend and probably a lot of your girlfriends as well. It's kind of a girl thing to be into astrology. So you have these birth astrology things where you can say certain things about a person that is born on a certain day or in a certain month. And most of us guys, we don't really are into astrology. It's mostly our girlfriends or girls that are into it. Technical analysis, on the other hand, is like astrology for men because it's based on uh, indicators and on it's very rational and so on. And a lot of guys are into TA. If I look into our community or if I look on Twitter, these technical analysis posts, they get thousands of likes and lots of interactions, and everybody has their own takes and opinions on that. And last week, I guess we saw two things that got invalidated, or this week, and mainly this is close below the 200 weekly average, and we kind of went below an all-time high. So these two things are probably the things that are talked about the most, or where people are worried the most. And yeah, maybe we can start with these two.
Yeah. Yeah. Why don't you get started? What do you think it means? And then
Sure.
I'll jump in a bit. In general, I think people know that, you know that. I'm just kind of rehearsing that a bit for those that are maybe listening to this for the first time. I am more that person. I always kind of laugh a bit, obviously, at the technical analysis, but I do understand why people like it. And but I think so it makes a bit more sense for you to lead there, and then I'll tag along.
Are you, so you're more into astrology, I guess.
I'm just waiting. I'm listening to this and I'm just waiting for the entire gender equality mob to jump on top of this episode because what men can listen to astrology as well or something. I'm just waiting for that. So yeah, Fabio
Yeah.
Fabio opening the can of worms here.
Sorry about that. It's I'm joking a little bit, of course, but maybe for everybody that let's go into the juicy details. So, in all of Bitcoin's history, we've been at the 200 weekly moving average, and this is practically a 4 year average. So yeah, a year has 52 weeks. 200 is almost for 4 years. And in all of Bitcoin's history, Bitcoin never closed below the 200 weekly moving average. We've been visiting these levels 3 times, or 4 times actually, and we never closed below it. We had drops below it, but within a week we kind of recovered and closed above the 200 weekly moving average. And historically, that's also what we touched on in the last Twitter space. This was an exceptional buying opportunity always in Bitcoin's history. And everybody was kind of expecting that we are visiting the 200 weekly moving average, but also that we are not closing below. And if you go back one Twitter space or two Twitter space, if you listen back to them or if you were participating, both Julian and me mentioned these two levels: the old all-time high at 9,600. That depends a little bit on what exchange you're looking at, and the weekly moving average. And both kind of came in between 19 and 22,000. So these were the levels we are looking at, or most people were looking at. But we went through them like butter, so there was no resistance at all, and we kind of recovered from here. The things that I'm looking at currently is, if you look at polls from bigger influencers, or we kind of have our own polls in smaller Telegram groups where we just asked, hey, you feel the bottom is in? How do you feel about the current markets? And about 70% of people think that we still have to go lower. And a lot of times the 16,000 level comes up. Not 100% sure why the people are mostly talking about the 16,000 levels, but it could, of course, be a bullish sign that the larger majority of the people on crypto Twitter and in the bigger communities think the bottom is not yet in. Kind of makes me think maybe it already is in. But yeah, these are the main talking points. At least I encountered them a lot on Twitter the last week.
What do the other influencers? I mean, that they have all these genius models where that basically can predict the future. And obviously all these models kind of got invalidated. What do they say? Like, what does a plan B say? What does, I don't know, Ben Cohen, like, I think he was, like, I think he's way more like flexible in that, but like, what do a lot of people there kind of say?
Yeah.
Yeah, I just would love to understand a bit. I'm way too little on Twitter to follow that, and you obviously being in a community. I mean, at the end, you're the one who is really close there. So yeah.
So it's in my mind, it's a little bit of a blame game. So you had a lot of influencers that were dealing all this hopium, calling for six-figure bitcoins by December 2020, 2021, sorry. And of course, we have not seen these levels, and now it's a little bit of coping with the circumstances. So, and of course, you need somebody to blame if your model or if your call got invalidated. And the main thing I see, influencers or big crypto accounts, they blame this on leverage, and both on the upside as on the downside. So practically, if you have a system that is filled up with leverage, you practically limit the assets on the upside, and you increase the potential to the downside. And this is, in my mind, also exactly what is happening. It was we had this insane amount of leverage, people taking out loans, and of course 100xing on Femex or BitMEX or Bybit. And now you practically see all these margin calls coming in. And what maybe was the mistake was in 2017, we saw a lot of retail leverage. And right now, we see a lot of institutional leverage. Kind of the institutions, they make the same mistakes as all of us made in 2017. At least that's most of the bigger influencers, they kind of blame the leverage in the system for the bigger downside that we are seeing right now, and also that we are overshooting to the downside because we didn't really have a blow off top to the upside, but we are really having a bigger correction to the downside. And mainly, I guess, I don't know if you would agree with that, Julian, because of the leverage in the system, especially from institutions.
Yeah, 100%. What I maybe see a bit different is the following. I think in 2016, 2017, the way to really kind of get going was promising that you're going to do something, raise money on that, and then hope it works out. And just like in any startups, only 5% of the companies who did that actually succeeded. And obviously, this was called an ICO. And a lot of funds, a lot of companies just understood that there was so much money to be made there. And at the end, that completely spurred that entire bubble. So again, it was the ICOs itself that failed, but who really made this possible was all this super easy money that a lot of the VCs and a lot of the funds kind of started pouring in. So I'm not blaming this on the VCs. I'm not blaming this on the ICOs. I'm purely just saying this is the absolute normal kind of rhythm. You have something that works. It works for a lot of people for a certain period of time, and then suddenly it doesn't work anymore, and it stopped working after the first quarter of 2018, and that was the entire massive fallout of 2018. And then you look over the last, whatever, 2, 3 years, you see the exact same thing. You see the same thing with leverage. You see the same with um, like building on top of that. And of course, you could blame the companies who provide that leverage, and you can blame the companies who provide this really complex kind of stuff, who build these black boxes. And at the end, people pour money in it. It seems to work. They raise more money on top of it. People getting rich quick, and everyone is happy until not. So I just think it's always kind of, it's actually a very repetitive. If we kind of go back to 2014, back then it was like, let's fork Bitcoin, create a new coin. That's the better wheel, and a lot of it happened then, and then Mount Gox blew up. And I don't know. I feel it's always kind of a bit the same thing. And there's gonna be some interesting questions I'm gonna pose at the end, kind of around that. My fundamental belief, though, right, in all of that is, sure, this really causes some havoc right now in the price. But at the end, all of those prices, right, for every single coin, over time will always trend to the underlying value. I'm a value investor. I invest in Bitcoin. I invest in Ethereum. I invest in DeFi chain because I believe there's massive value in there. And being a value investor doesn't necessarily mean that all you can do is sit down and run discounted cash flow analysis. Like, sure, this is like the Buffett approach to like traditional value, and it's a very objective, very easy calculatable value. And I think it's not really difficult to kind of discuss that. But to me, the main thing in understanding value is that not only cash flow is value, right? That doesn't mean, I mean, sure, in times where risk off is kind of king, cash flow is king. So I do understand if you want to take a very conservative approach to value, then you're going to base all your investment thesis around value. But that is also why value has really, really underperformed since 2009 until pretty much the end of 2021. And other forms of value, and you may call this speculative, but other forms of value have kind of really done well. So my point is always the same. My point is I need to sit here as an investor. And so if people ask me, like, and I just had this question this morning because there was like this massive interview, big outlet, and they're like, so how would you kind of define yourself, Julian? And they were like, are you an influencer? Are you an author? And I'm like, no, I'm none of those. I'm an entrepreneur. First and foremost, I'm the CEO of Cake DeFi. And second, I'm an investor because I invest in pretty much any asset class. I always say the same thing. I'm a pure mercenary when it comes to investing. I look at fantastic investment opportunities, and I don't care if that's cash, if that's bonds, if that's real estate, if that is crypto. I invest in whatever I believe generates returns as long as I can ethically and morally kind of live with that. So I don't invest in war stocks, or I wouldn't invest in something that benefits from the Ukraine war and so on. So I wouldn't do that. But other than that, I'm not much. I don't have much religion around a single bit of investment. I actually bet on the religious beliefs of people that hold on to those investments. So that's kind of how I see myself. And these are the two main things here, right? So when I approach any of these topics from an investment standpoint, and now I'm kind of stepping away from the CEO role. I'm really talking purely about my personal investments. Then I look at the status quo and I ask myself, um, where are we standing with the price in comparison to value? And is that value? And obviously, if it's not cash flowing and crypto, it's some cryptos are cash flowing, but most are not. Let's say Bitcoin. Then I need to understand where's Bitcoin's value in regards to price. And many times it's very difficult to make an absolute prediction on that. So Bitcoin, let's say, is at 20,000, just let's round it. It doesn't, or 21, it doesn't really matter. Let's say it's 20,000. Then the key thing is not, do I know it is 18,500 that's actually the value, or it's 22,500 that's the value. Many times it's really more about understanding where's the value trending. Is the value going up? Is the value going down? And these are fundamental questions that I need to ask myself. And if I understand that, then I understand that the best times to invest is actually when I'm really, 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 really sure that either the tendency of the value is turning around, or the tendency of the value has already turned around. It's very, very, very dangerous to make predictions on these turnarounds. Price doesn't necessarily follow right away, but many times price follows value, especially in such massive moves. So if we take the example of Bitcoin and you ask yourself, is the bottom in? Then I made this tweet that I think confused the living shit out of everyone, where I said, predictions are completely worthless. And they are. Like me saying the bottom is at 10,000 or the bottom is at 19,000, it's completely worthless. What is priceless, though, is the process, how I get to that prediction. And that is what you, as a great investor, and I always hope that we at Cake DeFi attract those long term hodlers, long term investors, not those that just trade a price or trade a ticker or just gamble, but really long term. And so, what you're going to look at, or what you're going to think about, is the process, how we are actually getting to a result, right? The result is actually quite irrelevant, because who knows, right? Anyone. That's why I always kind of call these models and all the people who talk about how sure they are where the price goes, I always call them charlatans, because no one knows. It's impossible for someone to say they know where the price goes. That doesn't mean you cannot make predictions. I'm absolutely pro making predictions, but I'm more about the process, less about the result. So when I say Bitcoin could this year go to 10,000, it is irrelevant if I actually think it goes to 10,000. What's way more important is that why do I think that? Or if I say Bitcoin could go to 100,000, it is irrelevant. I know that the media and the news, they love to pick this up and say, oh, Julian Haas, CEO of Cake DeFi, says Bitcoin can hit 100,000. And then they don't talk about anything else. They only talk about that result. The result is a consequence of hopefully a very good thought process, right? So that is the key thing. And so what you need to kind of look at in the current state, the current scenario, is what is going to impact, what's going to influence for people, obviously, to get more demand to buy Bitcoin. That's the main question. It's as simple as it is, right? And then obviously at the same time, you want to understand what's going to make people less likely to sell Bitcoin. So that is the only thing. If you have more buying demand than selling demand, prices will go up. And if you have more selling demand than buying demand, prices will go down. It's as simple as this. So you just need to make predictions about human behavior. And that is very difficult, because humans, as we all know, in theory, they should be super rational. But then we also know, especially in times of stress, in times of when there's a lot on the line, most people become very, very, very emotional, even more emotional than they already are in normal times. And we already know that most people base 90 or 95% of their emotions on their of decisions on their emotions, or they base their decisions on other people's decisions. They change their mind just because other people change their mind. They don't change their mind, or they don't change their decision because the underlying facts change. They change their mind because other people change their mind. And that's absolutely incredible if you actually think about it. But that just also is supernatural, because we as humans, we are herd animals and we function really well in herds. And that's at the end what made us survive. So we don't want to kind of stick out. So if you're looking at this current scenario and Bitcoin's at 20,000 and you're wondering, hey, did the Bitcoin price bottom out at 17,000 something? I think 17,600 or something. Or are we going to see lower prices? Then there's actually only three factors that are going to decide whether people want to buy something more or whether people want to sell something more, right? There's only three factors. Um, First and foremost, it's always what's the utility for that human being? It's all about utility. That's the number one driver, right? It's the most important factor. So if 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 you can understand and you can explain in simple terms what's the utility of Bitcoin, and now comes the second factor, for as many people as possible, then this driver is absolutely strong. The reason we all want water is because we all know without water, it's not going to take long and we're all dead, right? So it's super, super simple to understand why there's value in water. It's very difficult to actually put a price on water, right? If I tell you what's the price of a liter of water, it really depends. And it depends actually on the third factor, and that is how rare that thing is. So if you live in the mountains where there's a well and the water basically comes out of the mountain, you're going to be like, man, I'm not even going to pay a cent for the water. But if you're in the desert and you're close to dying, you would basically pay everything you own for that last liter of water. So you at least have a little bit more chance to survive, right? So it's so essential to understand those three metrics. And now the interesting thing, so let's talk about the water example. And I always like this example because at the end, it's water doesn't produce cash flow. Water just stays, right? So if we have this, let's say, liter of water, and you're wondering what is a fair value for that liter of water, then we could poll 100 people and everyone's going to give you a different answer. Some people are going to say it's worth less, and some people are going to say it's like $100, and it's going to depend on what news people watch, and they read about how Nestle is buying up all the water wells in Africa and is trying to own all the water, right? So it's a very emotional topic, and it depends a lot where you come from. So it's very tricky. But what we could do, we could understand how those three factors are basically influencing the relative value to each other. So obviously, for example, imagine the utility of water doesn't really change, right? So in this case, it wouldn't really change. But let's say there's more and more people, or there's fewer people. Obviously, this would have a massive impact. If there would be twice as many people suddenly, well, guess what? There was going to be more demand for buying water. Now, the key thing here is these double number of people need to understand the utility of water for them. With water, this is very simple. But guess what? Whenever I ask people about the utility of Bitcoin, I get these really confusing, complicated answers that, I don't know, maybe you who has been in this field and has been following Bitcoin maxis for the last 5 years, and you can deal with these terms. But this is maybe 1 or 2% of the entire population. If you want to try to reach 50% of the population, you need to use terms that these 50% understand. And you don't only need to use terms that these people understand, you actually need to show this utility in super simple terms. And that still doesn't necessarily mean that this is what those people actually want, right? You can only guide people to the well. At the end, people have to drink by themselves. And whether people drink or not, obviously depends a lot on if they really have to and if they really want to. And again, that is then defined again with the utility side of things. And then the last part obviously is rarity, right? How rare is water? And so obviously if we have a changing kind of environment, if everything becomes drier, becomes hotter, becomes warmer, it's way easier to kind of understand how the value of water is going up, and over time, probably also the price. And so if we kind of look at those, then personally, right? So that's just me personally. I look at the rarity of Bitcoin and I compare the rarity of Bitcoin, let's say over the last 6 months, since the beginning of the year. Let's just use that. Obviously, I could say Bitcoin has become less rare because more and more Bitcoins got mined. At the same time, more and more forks were created that cause a little bit of pressure on the rarity there. But me personally looking at this, sure, at the same time, people lost their Bitcoin. So I don't know, probably the rarity of Bitcoin has stayed quite stable, right? So I don't think there's a massive increase or a massive decrease. And again, this is the process to how you get to a result. That's the key thing. You may completely disagree with that, and that's absolutely fine. That's actually what makes good decision making, right? Good decision making is not me coming up with a number and saying, I think Bitcoin's going to hit 50,000. And you're like, Nope, it's going to hit 40,000. That's actually stupid decision making. What's really great is for you to kind of challenge the underlying process, the underlying kind of facts that get fed into an entire machine, and that machine then at the end spits out a result. So the only thing that you can actually debate is the facts that go in and how those facts should get processed. And then whatever is the result, you need to accept this as the result. And that's the key thing. So personally, I don't think much Rarity has changed. Then when I look at do have more people kind of realize the value of Bitcoin? Have fewer people? Are people disappointed? Has the Bitcoin opportunity opened up to so many people? I don't know. Then I think over the last 6 months, you can look at kind of active addresses. You can look at all of this. I mean, sure, some people are super disappointed. They lost a lot of money. Other people see massive opportunity. I would have also said this number has stayed probably very stable, right? I don't know. You can look at app downloads, you can look at coin market cap ranking numbers, look at Coinbase. I mean, these are the massive kind of onboarders. I don't know. It feels like it's very, very stagnant, very, very stable over those last 6 months. And you could disagree. Maybe you're like, oh, no, you know what? Actually, we grew by 10%. Oh, no, we kind of went down by 25%. I would have just said it's stable. So to me, it really, really, really comes down to the utility that Bitcoin provides to this number of people and how rare this utility actually is. And for some reason, people judge that this utility must have dropped dramatically, namely by 70%, since the all-time high was reached end of October, beginning of November. And so now we need to assess as rational decision makers. We need to assess, since I believe the number of people is kind of the same and the rarity hasn't changed, I only need to assess, has that utility indeed gone down so much? Maybe has it gone down even further? And is this utility coming back, or did this utility never exist? Because if this utility never existed, then it's completely rational that the price totally collapsed right now. But maybe we were right in October with the price, and actually a price of 69,000 is completely reasonable. And so if you sit there now and you make up your mind right now already, you're like, oh yeah, the 100,000, that's the right price, and people right now are wrong, then you're a bad decision maker because you actually haven't put in the facts that actually feed the kind of decision tree, right? And so you need to have kind of result. And so what you're going to come down to is, and that's at least me, right? I see three utilities, the two utilities that I think that are the truly fundamental utilities to Bitcoin. The very first one, peer-to-peer cash without a kind of centralized party, is that payment system, right? And I completely agree. I personally don't see that this will be the main driver. I've been very vocal about this. I always say that Bitcoin shouldn't be called a cryptocurrency. But again, this is a very personal, subjective view on things. You may have a completely different view. You may say, no, 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 no. Julian, in the future, Lightning is going to get huge. No idea how they're going to open all those Lightning channels for hundreds of millions of people because this takes hundreds of millions of transactions. No idea how everyone is going to take care of this by him or herself because a lot of Lightning actually needs a lot of centralization to onboard a lot of people. But maybe I'm missing a lot of things, and this can actually be done really, really, really well. I don't see this. I always think that this utility for Bitcoin as payments is always going to stay because it's always relevant to a few people. I just don't think that that is the utility that I would run with. And I stated this in 2015 already, right? So when I wrote the book, Cryptocurrency Simply Explained, I made this abundantly clear. To me, the main utility for Bitcoin has always that been of an asset. So that means it's just like gold, different function, but just like gold, digital gold. It's this censorship resistant digital something that I know if I can self custody this thing, no one can actually take it away from me unless it's done with harm or force, which would be against the current laws, right? So, I mean, I don't know, maybe in 10 years laws change and this would be legal. I don't know. But under current laws in the jurisdictions that I live in, it's illegal to put force to me so that to force me to send away the coins that I own. At the same time, no one can stop me from receiving those, right? So, of course, the payment system would come in there, but for me, it's still this asset. And the key thing there is that doesn't mean that I ever need to send that. So it's just like gold. I share these stories all the time. I still remember when I moved to the US when I was 15 years old, long time ago, 21 years ago, and my grandmother gave me that necklace made out of gold. And she always said, if you're ever in the US and you ever need to come home and you have no more money, sell this piece of gold. You will always get something for it and you will always be able to fly home. And I still own this necklace until today. It's probably the thing that I own the longest in my entire life, right? It's this piece of gold that I have around my neck, which always reminds me of that. And so, is this necklace valuable? Is this piece of gold valuable? Whether I transfer it or transact in it or whatever? No, it's not. It has this strong inherent value because of the properties that gold has. And Bitcoin has different properties. So definitely not the same as gold, but has kind of this digital gold character, for me at least, where it's a censorship resistant digital something that I know it's also an insurance policy to me, right? If the world goes to shit, this thing is an insurance policy. Now, there's an important kind of add-on to this that I mention a lot of times. If this utility goes up massively, this actually means that a lot of the world really goes to shit. So I always kind of see this as this insurance that I hope I never need, but I'm glad I would have if I ever needed it. So keep that a bit in mind, right? So that to me is always what I kind of see there a bit. So if I just look at those two utilities, right, and I compare those two utilities and say, how has payments, the utility for payments, how has this thing moved over the last 6 months? And again, I'm talking about Bitcoin payments that do not immediately get converted into dollars. There's a lot of Bitcoin payments that immediately get converted into dollars, where Bitcoin is just a settlement layer, which makes a lot of sense. This I actually think will happen a lot. But then it's always into dollars and out of dollars. So it doesn't really impact the Bitcoin price because it's a buying and selling. So if I look at this, I don't know, maybe you know the data a bit better than me, but I would say it's probably stayed quite stable, right? So I don't think the payments, importance of payments in Bitcoin has done much over the last 6 months. Okay, that's my personal kind of subjective view on that. If you have some data on that, you can probably make a bit of a better decision, but that's how I see it. Minuscule, right? To me, not much impact. At least this thing doesn't justify why the price dropped by 70%. Okay, let's think about the censorship resistant digital something. To me, that thing either has stayed the same or it probably went up a bit and increased in utility for the simple reason because, I mean, we have seen Canada doing some really dodgy shit to all kinds of people there who kind of were of a different opinion than some other people. And you can agree to the opinion or not, but then basically debanking those people is just, I mean, that to me is the absolute, like, that's exactly why I want to have some Bitcoin, right? And then we have the entire kind of Ukraine conflict, a lot of like people definitely benefited by putting their assets into Bitcoin, not having to carry physical stuff around when they fled. So a lot of additional benefit there, right? The only question now becomes how big of a change was this utility? Is this a massive, massive impact? And so where I then actually go and say, those two actually wouldn't justify the price dropping. But so what did justify the price dropping is that third major thing that Bitcoin has had over the last, since it's basically got created, which is it has been this major risk on vehicle. And you can see this if you compare this to the NASDAQ and so on. I mean, whatever was risk on in other assets, Bitcoin has been right there. And if I compare the purchase power that went into Bitcoin because of risk on, I would probably just say that this was the majority of all the purchase power for the simple reason that neither payments nor being relevant for censorship resistant digital something in the G20 countries, which have the most purchase power. Most people there will not allocate Bitcoin because they want to pay with Bitcoin. They will use their credit card. They will make a bank transfer. In Singapore, I'm dead honest. The probability of the Singapore banking system completely censoring me in the next 12 months. I mean, maybe now I'm like saying something and I'm just kind of challenging it. But I think for the banking system to censor me in Singapore, I would say this probability is super tiny, right? And in Europe, probably the same. And in the US, sure. I mean, you can be this very conspiratorial kind of person, and you think, oh no, in Europe, the censorship resistance is going to go up because everything is going to blow to pieces. And in the US, where everything gets so polarized, depending on what parties you're in, you may say, oh no, you know what, this, like, if Biden wins in November, everything is done. If actually the Democrats, if the Democrats win, we're done. If the Republicans win, we're done. And reality is probably life will go on. So again, just how you see this, right? So the majority of the purchase power, in my opinion, in Bitcoin is because of that risk on utility function. And it was massively strong. And in the altcoins, it was even stronger. So it was kind of a leverage of that. And so if you then look back over the last 14 years, maybe, and you look, when was the last time that there was actually a significant period of risk off behavior? You won't find much, right? You won't find much risk off behavior over the last 14 years. Sure, you will see certain times during COVID, and that's also why Bitcoin completely crashed during this time. You will maybe find some times during 2018. But other than that, it's very difficult to actually find times during the existence of Bitcoin and cryptocurrencies as a larger market where there were extended periods of risk off behavior. And so at the end, what you're going to have to judge probably is three things. When do you see risk on behavior to come back? And if you then think that, for example, hyperinflation, because so many people tell this fairy tale about Bitcoin being great for hyperinflation, during hyperinflation, no one has any money. Everyone is just super worried. They have a lot of money. They don't have purchase power. So everyone is just super, super worried to actually not have enough purchase power, right? At the moment, we see high forms of inflation, not hyperinflation. So the reason why, in my opinion, Bitcoin would do terribly, just like most cryptocurrencies would actually do terribly in hyperinflation, is because no one would have any purchase power. Everyone has shitloads of money, but no one has purchase power. And so the purchase power would go into things that people actually need to survive. And sure, this may be Bitcoin, but it's more likely to be commodities and more likely things that you actually utilize to actually kind of make like to live as a human being, right? And that has always been kind of in the past the same way. So even if you compare gold or precious metals to commodities during hyperinflation times, sure, gold has done well. Look at commodities; they have outperformed gold massively during these times because people really kind of needed to stock up on those, not on a piece of metal. And so, the first bet you have to make if you look at the bottom is risk on coming back. Or the second one, you're like, oh no, you know what? Bitcoin, Julian, you're so wrong on this. Bitcoin payments, humongous. Like this thing is going to turn around in the next 3 months, right? So the bottom is totally in because you're mispricing what's happening with all the payments in Bitcoin. I don't see this, but maybe you do. Or you say, oh, you know what? Everything is going to go to shit now. Banking system completely collapsing. Dollar completely collapsing. Um, Everything the Fed is doing is completely wrong. And all of this is completely going to implode. And all the digital assets need to go into something. People are going to start seizing stuff. So if you own shares or stocks, this is going to be taken away from you. Gold's going to be taken away from you. And the only thing you can like escape with your purchase power into is the only digital thing that's like non-confiscatable, which is this digital censorship resistant something called Bitcoin. And so if these are the things that you see turning around, and now we can talk about some factors. I want to hear your input, Fabio. But then we can talk about some factors that could kind of influence that. But then you would be really good at timing a bottom, not necessarily the bottom, but you would be timing this value kind of bottom, right? This perception bottom. And that's at the end the only thing you can actually time. You cannot time a price. You can time the value. You can definitely time that because that means that you have an analysis of what's going on. That doesn't mean that everyone else realizes that at the same time. And this was the same. I mean, I sold a lot of Bitcoins in October, and I still remember how people were kind of making fun of me and telling me how have fun staying poor. And I was like, look, I'm not selling because I think the price is going down. I'm actually selling just because it outperformed my portfolio so much. And I just think that what's going on in the world right now is going to put people into a lot more risk-off behavior. And I just don't think Bitcoin will do well during this time. And I mean, looking back, obviously, the outcome was very beneficial, but even at that point, the decision was right. And so this is how I approach that. And I don't know, Fabio, what do you have to kind of add or share there or thoughts into this monologue that I just made?
I love it, especially how you explain value and the big factors that play a role in valuing something. It's the only things I would love to add is so there is this big discussion, and you also made a few tweets on the topic of is Bitcoin actually working as an inflation hedge? And clearly, this year it's not. we're down, I don't know, 60% from the beginning of the year, and this is practically we had an inflation of almost 9%. At least that's the CPI. But I would maybe replace the word, like Bitcoin is behaving as a risk on asset, and most people know what is risk on and what is risk off. Sometimes I have the feeling that it's much better to replace the word risk on with liquidity on. So if you go back in March
Mm,
2020
hmm
or
hmm
April 2020, the day that the Fed announced they will do quantitative easing, that was, I think, the 1st or the 2nd of April 2020. This was the day when the bull run began. And when the bull run ended, it was practically in December or November-ish of last year. And this was the first indication that the Fed said, hey, we're going to be a little bit more hawkish. And risk on or liquidity on assets were responding instantaneously. So maybe before we go into the whole macro and the Fed and the influence it has on the market, I want to touch on a little bit of a fun indicator to see if the bottom is in. And these are it's more of a social indicator, not really a technical one. But if you look at a few people that all of us certainly know, like an economics professor, Noel Robini, he had the day Bitcoin bottomed out in 2018. He made a tweet and he said, here you see it, the bubble burst and everything is down 80%. I told you so. And this tweet marked the bottom, the Bitcoin bottom in 2018. He kind of had this tweet, I think, last week on, I don't know the exact date. In the week, we saw the 17, 18,000 Bitcoin price. He came out with a similar tweet. And not just him, you have, for example, Peter Schiff, exactly the same. Then you have like traders as Peter, I don't know his last name, but he's a kind of a more famous technical analysis. And he also had on every single bottom that Bitcoin made, he pushed out a tweet and he said Bitcoin is practically has a 50% chance either it's going to 1 million or he's going to zero. And he made that tweet 3 times, and every time he made it, it was the bottom. And maybe a last social indicator that I find kind of funny is on the week where Bitcoin topped last year, the ProShare ETF to long Bitcoin came out. Guess what? Last week, they brought out a Bitcoin ETF where you can short this thing. So it would be super funny if the Bitcoin top was reached the moment where they launched their ETF to long it, and the Bitcoin bottom would be reached the moment they are pushing out the ETF to short it. It's just a fun thing to think about. But maybe we can use the last 15 minutes or so to jump in into the macro a little bit and what the Fed is doing.
Sure. And Fabio, I really love that. Actually, I love that about that, like Bitcoin being like a liquidity on idea. And I think that's, yeah, I think, I think Tomas Palihapatia, very early on, I think it was like super long time ago, already mentioned this, where he said Bitcoin is like the sponge. If there's like a lot of liquidity in the world, it kind of sucks it up. And then if people actually need to use the liquidity, they tend to sell that first, because things that produce cash flow are just so much easier to price. And probably, yeah, not wrong either. So yeah, so again, like I think maybe one key principle you should really kind of have is don't try to forecast price, forecast value. Totally different approach, right? Because you cannot go and look at the chart, because value doesn't get dotted on a chart. What gets dotted is basically price. And so try to forecast value. It's a totally different kind of idea. First of all, it's impossible to move like as quick as price. It kind of automatically adds time horizon to your entire decision making, which generally tends to make better decisions. Again, so you probably have 3 factors. Let's say, let's do 5 factors. Number 1 factor is rarity. So obviously a massive driver to the price, right? In a negative way would be if Satoshi would suddenly jump up and say, hey, hello, I'm Satoshi. I was kind of hiding. Now I'm going to dump all those Bitcoins on the market that I own. Super, super improbable scenario. But this would affect rarity because not more Bitcoins get created, but suddenly you would have a massive additional kind of liquid stash of Bitcoins hitting the market. Unlikely. You have the exact counter scenario, or obviously the same thing could happen with a piece of code that would suddenly kind of be unveiled that there's a bug in the code. Unlikely. Like I would discount those with a very, 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 very low probability. go the other way around and say suddenly Bitcoin becomes rarer. How would it become rarer? Well, obviously, bad scenario. One of the large exchanges has some massive issues and they lock up a lot of the Bitcoins into some contract. Maybe they have a multi-signature function and something happens there and they just lose access to a lot of Bitcoins. Again, Bitcoins cannot get destroyed, but you can lose access to them. And so again, also very unlikely scenario. But and especially it would really need to be a lot of kind of Bitcoin. So that is a very key function. There is though one that I would keep in mind when it comes to the rarity function, right? And that is actually the Bitcoin, a potential Bitcoin ETF that would come out of Grayscale. For the simple reason, because there's a lot of Bitcoins locked up in the Grayscale Trust. And if this thing gets converted into a spot ETF, the Bitcoins locked in the fund right now, in the trust right now, could be arbitrageable against the Bitcoin price. And this will have selling pressure because there's a discount. So people are going to buy the trust and they're going to sell spot. So this will have a massive impact on the price. Now, the question is, what's the price going to do prior with the announcement, right? So that actually automatically brings me to the second part of the entire value function, which is number of people. What would have to happen right now that a humongous new number of people either find out about Bitcoin or get an appetite for Bitcoin and or what would be the like nothing changes the rest, but just the number of people. Obviously, removing people right now, I think it's quite difficult. Generally, these networks have more of a positive effect. So sure, you could say regulation jumps in right now in a massive jurisdiction and says, you know what, all of Europe, like any kind of, I wouldn't even know how to do it, but let's just say for the kind of hypothesis here, all of Europe jumps in and says, no more Bitcoin ownership. And suddenly, obviously, not everyone, but a massive amount of people in Europe will kind of abide by the law and say, no more Bitcoin, I'm going to sell all my Bitcoin, right? So obviously, fewer people, and that would have a negative price impact. But this can be the exact opposite. Obviously, if there's a country that is super pro Bitcoin, maybe makes Bitcoin a currency in their country, it generally doesn't have so much of an impact. Unless actually the entire economy would be priced in Bitcoin, not just as converted from dollars. But this would obviously have a positive impact. And then obviously, not only number of people, but more purchase power that would have access into Bitcoin. And here, the Bitcoin ETF could have, especially in the US on the spot price, could have a massive interesting impact. Because obviously, what from one day to another, large funds, 401k, so massive amount of purchase power could have access to Bitcoin. And so what's going to get balanced out here, and it's very difficult to run models. I actually tried to run that. It's not that easy to kind of run the models. What would happen to the Bitcoin price if Grayscale would actually get converted to an ETF? Some people are like, or most people, when I ask this on Twitter, most people will say, oh, this is super bullish for the price. And I'm actually not so sure. I think probably it would actually have a relatively neutral effect, hopefully a neutral, not a bearish effect, because it would be a competition between more purchase power coming in and at the same time more Bitcoin suddenly getting liquid on the market. So this would be quite an interesting kind of challenge. So these would be things to look at. But then if you really look at the three things, right, then you would be looking at, okay, is Bitcoin going to change, suddenly becoming this massive payments system where then value doesn't constantly leave Bitcoin and go into dollars right away? Again, I don't see that. Maybe you have some insights. I don't. Then the only two things that are left that to me are the major things, maybe together with the Bitcoin ETF, the major two things that I'm looking at is, do I think that the entire system now is going to go down? Is the Fed completely overcorrecting? Are they not only causing a recession, but are they really kind of destroying the entire system? Or let's go the other way. Or is the Fed actually realizing that they do cause a recession and they need to course correct? The midterms are coming up. The Democrats are going to push for an easier kind of monetary policy to get some positive momentum for the midterms. Very typical, has nothing to do with Democrats. It's just a typical kind of behavior. Any party would do that. And is this actually going to cause suddenly people sitting there, and to use Fabio's words, suddenly feel like, hey, you know what? Life is actually not so bad. I do have this excess liquidity. Oh, great. YOLO. And let's go into the altcoins. Let's go into Bitcoin. And suddenly the value shoots up again because people kind of have suddenly this excess liquidity. And so these are the questions that you, at this stage, really have to ask yourself. right? If I kind of look at all those. And here, I think, especially over the next 10 days, we should have some indications on what the Fed is actually thinking. Um, I mean, yes, I know Fed meeting is past, right? It was mid-June. Next Fed meeting is end of July. Then there's a summer break, and then the next one is September, November, December. But generally speaking, these Fed officers go out now. They go on talks, they give speeches, they kind of give indications on what they're thinking, what they're kind of forecasting. And so at the moment, expectation still is that interest rates are going to get lifted by another 0.5% end of July. Maybe they're now saying, hey, we need to front load even more. Maybe we need to go to 0.75, just like they did in the last meeting. Maybe they're going to give us indications on what they think about September. I think the September one is going to be the key one. I don't think the July one is going to be so relevant, whether July is 0.5 percentage point or 0.75. I'm not sure if that's going to have so much impact. I think the key one is going to be the indication on September, November, right? So they may actually front load now July, put another 0.25 on top of the 0.5 that is expected, so total of 0.75. Maybe the market course corrects a little bit, but what's going to be way more important is the Fed going to say, hey, you know what? And now let's wait and see, because based on our calculations, inflation should be topping out. It's going to actually go down. Let's not over course correct. We don't want to completely disturb the market. Looking at the large bond markets, repo markets, everything is still healthy. So yes, I know all the risk on assets kind of really kind of suffered. And then let's see. And then I really could see that. And that's where I actually am hopeful that we do see a turnaround in value right now. That turnaround in value really comes that the question obviously is, where is this low point in risk on expectation? And I do think we're going to see this a bit right now. The question then literally becomes, how long is this kind of risk on behavior going to last? Is this going to be another 5 years, or is this just going to be short lived and it's just going to be until the end of the year? But these would be things that I would really consider right now. And that again brings me to that massive, massive, massive important kind of financial advice. And I hardly ever give financial advice. And here I do give financial advice. And that is, at the moment, it's super, super dangerous. If you are making concrete extremist decisions, so at the moment, it's just super dangerous. If you're going all in cash, all in crypto, all in stocks, all in gold, all in into one thing, to me at the moment, that's absolutely ludicrous, because markets are so emotional and it's so difficult to predict that. And so if you're making these extremist decisions, sure, you maybe hit it, but odds are you probably won't. And it's just very difficult. So just as always, try not to be wrong at the moment. I think that's important. And the second thing, many, many times when markets are so emotional, when there's one emotion completely trending, it's just almost impossible to make this emotion even worse. If everyone is scared and everyone thinks it's going down, there's just no one left anymore that can be added to that side of it going down. And it can then go quite quickly that market's actually turning around, and they can turn around like viciously, right? So these are just the things where I am actually relatively hopeful at this stage, simply because I actually could foresee that the Fed is now giving a bit of a signal that says, yeah, look, actually July, we are doing 0.75. Yes, I know we said 0.5, but we're front loading. But then we're going to look at the data, and it may actually be possible that we are not even raising in September, right? Such an indication, I promise you, would actually make the markets go like nuts, because they're like, hey, we already priced in the 0.5, 0.75. The Fed is actually quite confident that we're stable now. Woof, and you will see off it goes. So these are just a bit of my thoughts. Fabio, what do you see? Anything to add, or what are your thoughts on that?
Yeah. So one or two smaller things. So you asked the question, what could actually drive up the next big Bitcoin cycle? And sometimes I really feel that most of the retail in Western countries, everybody heard about Bitcoin and people already made a lot of decisions. And the only thing that really drives retail is price. So most of the time, so if Bitcoin runs up in the direction of all-time highs again, the whole retail flaring, the retail will be back, of course, because the price is going up. It's exciting. It's on the front page of every newspaper. But what I think what could actually drive the next cycle is regulation. So a lot of institutions and pension funds, sovereign wealth funds, and all of these, they need clear regulation, not a little bit regulation, not, oh, a task force looking into this. They need to know, is this something we can allocate capital into without running into any risks regarding regulation? So for me, at least in my mind, regulation it would be the thing that drives the next run up. And I'm convinced there will be a next run up. But maybe let me touch on one other thing. A lot of people confuse, they think the Fed is driving the market and making decisions on their own, but it's actually politics that is driving the Fed's decisions. So we had Trump, the Republicans in power, and the most important things for the Republicans was the stock market. Trump was obsessed with a good stock market. And he tweeted consistently about it, and he applied a lot of pressure to the Fed that the rates need to be low. And they were low for his whole presidency. So now we have the issue of inflation. The Democrats and Biden, they are mainly worried about inflation. So they're pressuring the Fed to take action, and they will follow through with all the rate hikes until inflation peaks. That's their mandate. They need to do that and have pressure from the Senate and from the Democrats to actually follow through with their promises. And they publicly stated that they are going to do it, and they showed that they will. So I want to make a chess analogy. I know for a fact, Julian, that you're kind of a decent chess player and that you play a lot. Me, on the other hand, I'm a very bad chess player. And I play sometimes, but if you're bad at chess, you will notice that before the end of a game, before you lose, there will be a lot of checks. So your opponent, he moves a piece on the board, and you find yourself called out. Hey, check! You need to move, and your options, they tend to decrease, and the rate of being checked increases as longer as the game goes on. And I think it's kind of a great analogy. The Fed is kind of their first check was probably with the financial crisis in 2008. Their options got limited, and they needed to act. So, and right now they are kind of being checked as well. They're like, okay, hey, inflation is flaring up. You need to move. What's your move? And they need to make a decision based on the pressure that is applied by the economics and by politics. And their options are limited. Right now, they practically need to decide economy or inflation, unemployment or inflation. But the longer they are following through with their course, the more limited their choices will become, because the economy is already crashing pretty hard. Unemployment is still low, but the longer they go on with their rate hikes, the higher unemployment will get, and the lower the economy will go. And at one point, their check is going to feel a lot different than it is right now. And I guess what the liquidity on bet, so the crypto bet or the Bitcoin bet, is all about, is we are kind of expecting the Fed to turn around at one point. When this will be, nobody knows. I think the midterms are a good chance, a good possibility, and there's a lot of data that indicates that as soon as inflation peaks, that we could see the Fed turn around and be a little bit more dovish, but we kind of don't know. And this is probably the assessment that all of us at the moment make. Do we want to be in cash and wait for lower prices to go into equities, to go into risk on liquidity on assets like crypto? Or do we speculate that the Fed is actually going to follow through and we're going to have a longer recession, and then probably want to be in cash? This is a little bit the situations we're in right now. I don't know if you agree with the chess analogy, Julian. I'm not as great as a chess player as you are, but I know how losing in chess feels like.
No, I love the analogy. And I think it's great. I think another point that I always make from chess is great chess players, they try to attack their own kind of position. And bad chess players, they always assume that they are the only ones attacking. So they like to kind of look at the analysis here, or the analogy here in crypto is most people ask me, hey, which coin has the most upside? But like, start with the question first: which coin has the most downside? And not only the coin, but which portfolio, right? And so I love that analogy actually. No, not much to add from my side. I mean, the only thing how I wanted to close the loop at the very beginning is if we ever gonna turn this around, there has to be major liquidity coming in. And that liquidity either comes from super strong utility or it comes because I don't know, suddenly there's way more people or more purchase power that before wasn't possible to come in. And these gonna be the main drivers. And so if you can kind of predict those, then you're going to be very, very good at predicting value. And you're going to be very, very good at the end over time becoming very wealthy. And obviously, the longer of a time horizon you give yourself on this, the higher the chance you have to be right. To predict this on a day by day basis is almost impossible because the fluctuations are so tiny. But obviously, predicting this over years, and this is now, if you kind of break this down, right? I'm a very kind of first principle kind of person always. That explains why investing over long time horizons is so much easier than on a day by day basis. Because on a day by day basis, you need to judge a lot of the emotions around those numbers, right? Where over longer periods of times, it is very easy to make predictions over what can happen in a general kind of trend, where in the short term, it's almost impossible because there are certain factors and fundamental kind of movements that we see over time. And that's just that's just always what makes it so much easier to kind of work out that entire process. And so what can make the price go back to an all-time high? Well, either massive risk on behavior again, can be regulation, because regulation can be, hey, you know what? We have this excess liquidity, and now this asset class becomes uber safe from a regulation standpoint. Yes, it may still be volatile, but now this thing is so straightforward. Let's get in there. And that can be a massive driver. Or it is another very, very key part where either the Fed says, hey, we're printing so much money, and everyone is like, hey, the Fed is printing money. There's one thing that's going to thrive in this: crypto. And this thing completely goes up, right? Risk on, liquidity excess. Or there's some shiny new object, this new holy kind of grail in the crypto space that is suddenly being this super interesting part. And obviously, and look, that is also why I generally, again, this is me personally, right? I kind of gravitate a bit more to coins where, yes, they may not have this perfect kind of money policy as Bitcoin does, but to me, the utility is way easier to explain, is way stronger. And that to me, for example, Ethereum, DeFi chain, that's why a person kind of gravitate a bit closer there. But I 100% understand when people say, no, for me, it's Bitcoin and that is it. Where I do have an issue is when people actually struggle explaining that part, or when they even explain it in a wrong sense. And many times, sadly, on Twitter and in crypto in general, you kind of see this, and then that leads to people making really terrible decisions. Um, yeah.
But maybe before we sum everything up, we are already 5 minutes over time. There's one question that got asked underneath the tweet that we might can address. So Brian asks, hey, if Cake DeFi gets bigger and bigger, will I think that is addressed to me, and Julian still have the time to follow through with these Twitter spaces? Won't you guys be too busy? Basically, this is the question. Or are we busy right now?
Okay, so there's a couple of things, right? I mean, I used to do a lot of German videos. I have almost stopped doing German videos simply because I really don't have the time. And then, to be honest, if I have an hour, then I rather spend that time with my son and not make like another German video. But I think at the end, it's all about scalability. And at the moment, at least for me, I block this hour every week. If I feel this hour would like become, I don't know, more valuable on something else, then yes, I will stop doing those and I will shift it to something else. But at the moment, I don't see that. I don't know how you see this from your side, Fabio.
Yeah, so for us, this is very low maintenance. So Julian addressed this quite often. We don't script this. It's mainly Julian and me taking a minute or two ahead of time, aligning what we want to talk about, and then just jumping in and having a casual conversation. And so this is fairly low maintenance. Both of us, we dedicate a little bit more than 1 hour for these Twitter spaces. And we get a lot of very positive feedback from you guys. We have got a lot of DMs and a lot of comments on Telegram and on Twitter that you really enjoy this format. And we can reach quite a lot of people. So this gets also uploaded on YouTube and on Spotify and Apple Podcast. And if you really count and sum up all the numbers, we are most of the time in the 5 digits, sometimes even in the 6 digits, and with listeners every single week. So we can reach a lot of people, and for me, it definitely makes sense at the moment to keep continuing with this format. We might change it up a little bit, have a guest or two, as we did 2 weeks ago when Crypto joined the space. But yeah, of course, if things change and Julian's time suddenly becomes increasingly scarce, then we might need to have a different approach.
Yep. Well explained. With that, I hope you get value out of this. If you do, then subscribe, click the like, follow us, and always happy to share our thoughts on this. And yeah, then I hope you're tuning in next time as well. Thank you so much. All the best in the meantime. Stay healthy, stay safe. Yours truly, Fabio, Julian, and the entire Cake DeFi team. All the best. Thank you. Bye-bye.